In my opinion, there has never been a better pair of rules to invest and live by than the duo Warren Buffett provided us with. When he shared, rule number 1 is never losing money, and rule number 2 all comes down to not forgetting rule number 1. Now, how in the world does an investor even go about never losing money in the stock market? Well, it's actually not as complicated as we all think, and I'll even make this video worth your while with 3 dividend stocks for you to walk away with. Ready? So if you're anything like me, you're probably consistently on the hunt for an esoteric formula to success. And when it comes to the stock market, you never, ever want to lose. However, in knowing that the odds are always stacked against us as investors and the market is about as unpredictable gets, we're going to have to settle with losing in the short term to ultimately win over the longer term. Now, what in the world does that even mean? Well, chances are if you're brand new to investing, you may be gambling. Or even if you're a tad more experienced, you may be playing your hand at the market while buying low and trying to sell at the highest of highs, meaning you're still ultimately gambling. Yet, there are probably the masses of you out there then who are really chasing dividend yields or trendy stocks to try to get rich by Tuesday. Anyhow, there's really nothing wrong with any of that. I mean, unless you're really looking to win over the longer course of time. Now, a word from the wise to the wise based on all my experience investing. I have a secret here to share with you. The real magic is going to happen when you adjust your mindset and think long term. No, I'm not talking about today's long term, which is all about a week or perhaps a month out or maybe a year. I'm talking about the next 5 to 10 plus years out. Why? Because in that amount of time, a stock can plummet to some low lows and then soar to some higher highs. And ultimately, you come out on top. And the key? Well, it comes down to Buffett-proof pieces of criteria. We're going to go ahead and break them down right now. First of all, we have to look at a company's brand name, one that everybody knows, loves, and trusts. On top of that, we need to look at management teams that are effective and honest, meaning they lead with values and ethics. But most importantly, clean balance sheets. And in doing so, I can assure you that you are going to stumble across some serious gold finds when it comes to the stock market, and in time, just compound your money. With that, I want to go ahead and talk about 3 stocks that, at least for me, are true buy, never sell, and just enjoy dividend investments. And with each of these, you're likely going to notice that they have sheer leadership in their respective industries, with the first dividend stock here on our list coming down to a sector powerhouse in the financial sector, Visa, ticker symbol V, which is in the business of digital transactions. And most notably, for every investor to really understand, not the actual lending aspect of credit, which means that Visa and other digital payment companies like Visa have created a way to really avoid risk while maximizing upside. Of course, Visa then makes its money elsewhere, like charging a fee to merchants with every single swipe. Now, Visa on the year here may only be up by about 6%, but zooming out to about the last 5 years, we're going to see Visa has spiked almost about 100% worth of appreciation. And over the last decade, Visa soared to over 421% worth of share price appreciation. But let's now dive into Visa's balance sheet to see that we have a very clean balance sheet here. $90 billion in assets, which is about $38.7 billion more than their $51.77 billion in liabilities. So we can certainly see as we scroll down here cleanliness there for years, which is ultimately why analysts continue to rate the stock a buy with 11% worth of upside expected, coming up to $305.59 per share. And holding on to a company like Visa for the long term will also allow you to just collect dividends. We're talking about a 0.76% dividend yield, which is not crazy, I get it, but it's growing by 18% year over year for the last 10 years. And by the way, it's been on a dividend streak here for the last 15 years. Now, before I cover the next 2 dividend stocks, if you're really looking to take some massive action this year, step 1 is simple. Join me on this journey by subscribing to get every stock idea that I have on a week-to-week basis. And of course, if you're getting value from this video in particular, let me know by tapping on that thumbs up button so I can continue to create more content just like this. With that, let's go ahead and jump into the healthcare industry with an industry-leading dividend juggernaut, United Health, ticker symbol UNH. Now, first and foremost, with healthcare companies, because everyone wants to live, well, I think they want to live longer, healthier lives, business is likely always going to be booming. But specifically when it comes to United Health, health insurance and service company operating in a country where private healthcare will likely just continue to prevail for better or worse, I don't think that they're going to be disappearing or slowing down anytime soon. A very moat-worthy healthcare company. As we speak, United Health has been sliding on the year here, as we can see. Over the last 5 years worth of time, though, we get 66% 6% worth of growth, and zooming out to about a decade, we get over 716% worth of share price appreciation. Right now, United Health is likely sliding as investors are really desiring tech opportunities or jumping into more growth-oriented stocks, but United Health remains a buy here when it comes to the analysts forecasting a share price to come back up to $594.22. It's about 14% worth of upside. Hedge funds also have been very favorable here when it comes to United Health, loading up on more shares last quarter. So what does the business really look like, and why is everybody after it? Well, taking a look at their balance sheet at a glance, we have $245 billion in assets with just $160 billion in debt, leaving a cool $86.35 billion to the company name. And investing into United Health, well, you're ultimately going to enjoy a dividend as that stock share price appreciates over time, just like Visa's here. It's coming in a little higher with their dividend at 1.45% of a yield, with a stretch of history at 31 years, while growing that dividend on average by 41% year over year for the last 20 years. And then there's Apple, ticker symbol AAPL. And for some of you, it may be Microsoft, but given I'm an Apple guy myself, with my largest individual position being Apple, wanted to go ahead and share this one with you. Now, of course, it doesn't need much of an introduction, but I think we need to understand that Apple is really a company with a mission to continue to innovate. Sure, we all know of their MacBooks and iPhones, but the company has their AI headset, Apple Car Initiative, heck, even an initiative in healthcare with Infinite Health to help measure blood pressure, glucose levels, or sleep apnea. Now, even if they just stuck to their phones or their MacBooks, well, Apple didn't just build a company, it really built a culture, which is what we need to understand. So let's have a look at it. The stock's actually at some all-time highs right now, trading for $187 per share, which is actually down on the year, but over the last 5 years, it's up by about 42%. And while everyone said Apple was done growing about a decade ago, here we are with almost 1,000% worth of share price appreciation. Now, analysts even see even more upside coming Apple's way to over $200 per share, while hedge funds I don't think ever stop buying more shares worth of Apple, almost 1 million shares purchased last quarter. Now, in terms of Apple's balance sheet at a glance, we're talking about a company with $352 billion in assets, liabilities worth $290 billion, making for about $62.14 billion difference. And because of the health of the company, shareholders get to enjoy a dividend along the way as the stock soars, coming in at a 0.51% dividend yield with an 11-year dividend streak. Now, that's been growing by about 9% year over year for the last 10 years. And there you have it, 3 dividend stocks worth a buy now, hold, and literally enjoy forever type of deal. But now I'd love to know which stocks you actually feel deserve to make this list, so comment those tickers down below to let me know. Be sure to discover more insights right here, or simply join me by subscribing and catch all the latest insights as they come.